The Bank of Canada has just increased their rates by 1%.
Hi, I'm Jessi Johnson, best-selling author, Metro Vancouver Realtor, and mortgage broker since 2006.
And I'm Azim Virani, longtime real estate investor and also a Metro Vancouver Realtor.
In this episode of Own Your Life, we're going to cover the current hot topics. The Bank of Canada's monster 1% increase, inflation hitting a 40-year high, June's sales data, a new pre-sale inflation clause, another real estate boom is highly possible, and how to predict gas prices before you fill up at the pump.
So right off the top, the topic that's on everyone's mind, the Bank of Canada's monster 1% increase. Jessi, when's the last time the bank raised their interest rates by that much?
The last time we had an increase of that size was 1998, so a long time. The last time the Bank of Canada's rate was that high was 2008 when we had that really big recession. So most economists actually predict the rate will go up another 75 points in September, but most were actually predicting it was going to go up, half a point, 0.75 for the last increase. So this was a really big surprise to everybody. No one saw that one coming. Now, to be clear, this only affects variable and line of credits. It's like variable rate mortgages, VRMs, and line of credit. So if you're on a fixed term or you're obtaining a fixed rate, this has no effect to you. So if you're curious what this will cost you, now, assuming you have a modest $1 million mortgage in Vancouver, basically it's $53. This 1% increase affects your mortgage per 100,000. So in that argument, you'd be up $530. So it's it's not a huge amount, but it's definitely up there, considering we've been going up quite a bit already this year. So the fixed mortgage rates are dictated by the bond yield. The 5-year bond, as of this morning, sits at the time of this recording at 3.06%. If you check out the 5-year bond graph for the past year, we actually peaked around 3.5, and it's come down, quite a bit since then. Will it continue to go up? Tough call, probably a little bit more. Would I go with a fix these days? 1 or 2 year term max, or I actually still would probably take variable. So because of the bond yield where it's at, this has caused a lot of lenders to bring their rates up substantially. For a little while, rates got up to almost 6%. Now it's a little bit less. So essentially, mortgage payments on a typical Canadian home are up about $1,000 a month, or 60% in the last 9 months. Like that's a big number, and that's going to be tough for a lot of families if they weren't prepared for that. In addition to the existing inflation we have, buying power is down over 20%. So if you were qualified for $1 million, now you're 800,000. That's a huge difference, for what you're looking to do. Mortgage payments compared to January of this year are upwards of 50% higher, because that's when, we were floating around 1.5%. That was our crazy low rates. So anyways, rates are being increased to combat our inflation that's currently out of control, which leads to the next topic, inflation hitting a 40-year high.
Yeah, the last time we had inflation this high was 40 years ago, not within the lifetime of a lot of buyers we deal with. We need to go back to the 80s to see rates as high as 7.7%. Specifically, I think it hit the peak in January of 83. Now, the current Bank of Canada Governor, Tim Macklem, expects inflation to climb past 8%. This could last for a few months or longer, we don't know. There is a goal to get inflation back to 2% target with a soft landing for the economy. Wednesday's decision makes the Canadian Central Bank's policy rate the highest amongst G7 countries. Just a heads up, they're likely considering another move of 75 basis points. That's 0.75%, this September. That's what we expect. So, as a result, families are starting to use their credit cards, lines of credit, and often this will continue to climb. But what's the alternative? Dipping into savings. What if you don't have any savings? Jessi, aside from the printing of money in record amounts, what else is causing this inflation?
Yeah, great question. Definitely Putin's invasion of Ukraine. That affected oil, gas, wheat. Ukraine's huge for wheat production. So overall food costs in general have come up substantially since the war and will unfortunately continue to be a challenge. The supply chain disruptions, they caused almost everything else that you're buying to go up. Pretty much everything is going through the roof in pricing right now because of that. This timing is terrible for the supply chain. It hurts the entire world. So, we all must assume that these inflation problems will last for at least 2 years. If you look back at the 80s, they went on for 3 or 4 years, if I recall correctly. So, we got to buckle down or buckle up and get ready. Families are going to continue to dig deeper into their savings, unfortunately, at this point. So, hold your money close to home. This will, of course, cause a recession. Now, one benefit is the unemployment rates are really good right now. So this is not going to be a typical recession. We're not going to get the same type of thing we had in the 80s. Unemployment is at its lowest point, which is a sharp contrast to what we had during the COVID period, COVID times. June actually produced the lowest unemployment rate in history, coming in under 5% for the first time ever. So, yeah, crazy stuff. So why don't we chat about June's sales data? Listings are up, sales are down, and prices are starting to decrease as we go into the summer season. The average home price in Canada fell for the fourth consecutive month in June. The fact that the fixed mortgage qualifying rate is almost 7% seriously hurts buyer qualifying and their affordability. If you check out the average national home price graph here, it is easy to see the direct correlation between prices and inventory or lack thereof. Mortgage interest rates are a huge factor in the decline of the market right now. Increased inventory is too, which is it's not a bad thing. It's a good thing in my opinion. That'll definitely have an impact. It's not much, but it's better than nothing. We'll continue to have an issue with not enough housing or availability for rent. Vacancies are still quite low. So June's sales in Greater Vancouver are down 35% compared to this time last year. They're down 16% in comparison to just May alone. So the June sales are, if you look at the 10-year average, they're down 23%. Fraser Valley home sales are down 43%. These are big numbers. Buyers, buyers are holding off. And many sellers still think that their home is, the same value as it was in spring. So a lot of nothing's kind of happening with a lot of areas, a lot of markets, a lot of realtors, whatnot. The big concern for sellers who are unrealistic with their expectations, once they realize that they're overpriced and the market won't pay their price, it's going to be too late. So you might have a scenario where someone thinks their home is worth $2 million. Buyers think it's worth 1.6. In reality, it's worth 1.8. So, you kind of get a bit of a stalled environment there. So speaking of 2 million, Metro Vancouver's average detached home, Metro Vancouver, not downtown, of course, or, west, sits at over $2 million, just the average house. The average Metro Vancouver townhouse sells for 1.115, so 1,115,000. The average Metro Vancouver, big area, Condo sells for 766. So if you check out the sales graph for Metro Vancouver, we're actually still in a seller's market. So things are still moving. It's not all doom and gloom.
Well, let's switch gears a bit and talk about the new pre-sale inflation clause. So pre-sale is becoming a popular investment once again. Some projects, though, as people know, are taking 3 to 6 years to complete. So by that time, we should be long out of hopefully the current mess that we're in right now with inflation and such. And investors in pre-sales who are buying now could be swimming in massive equity gains by that point. However, there is a new clause that buyers should watch out for that developers are adding into their contracts. For example, if building construction price index rises by more than 4%, the developer has the right to raise the price of the home by 4%. So this is very new, and it could very much affect what you're able to afford if you're buying a pre-sale that you feel is right at the cusp of what you can afford with your current credit limits. Given the supply chain issues and ever-increasing cost of construction goods, this could lead to a huge rise in acquisition of cost of buying pre-sale. Is pre-sale a good option for you? As with all real estate, you can't paint this segment of the market with the same brush. Call either of us and we can help you look at pre-sale properties that will work with your life and investment goals. Jessi, many brilliant minds are calling for another real estate boom, even in the middle of this likely recession. What are your thoughts on that?
I got lots. Not only is now a really good time to upgrade your home, but with the declining market, you can look at other options, to invest into your future. And so if you sell now with a long completion, then you're buying a more expensive home, of course, if you're planning to upgrade, at a lower price that will continue to decline for the next little while. So what would actually cause real estate to go on another run, even in a recession? It might be a great question. So with record levels of immigration, we still have what's considered very low inventory and strong employment rates, with addition to high rental income. This could cause us to go on another run. So, let's break that down a little bit here. First off, we crushed all records. We've already brought in 400,000 new immigrants to Canada in the first 6 months of 2022. The original projection was 450, and then of course the war came into play. So who knows where we'll actually land? Russia's invasion of Ukraine continues to bring in soon-to-be Canadians that were not necessarily originally expected in those calculations. So, low inventory means prices will continue to stay high. Job vacancies in Canada surpassed 1 million, and permanent residents were handed out permanent residencies, the PR cards, were handed out to 64% more people than this time last year. CMHC stated that 5.8 million homes are needed by 2030, to start to bring pricing down more affordable because of the lack of inventory. The Canadian government is looking to put 3.6 million new people in the country over the same time frame. Where the heck are we going to put them, right? So even if they don't buy, they're going to rent. And with such low vacancies, what does that mean for rental rates? They're going to go through the roof. They'll continue to skyrocket. So, Azim, what do people do when rental rates go up?
Yeah, well, that triggers the age-old question of, is it better to buy or rent? And generally, renters are going to lean towards buying again, which, of course, digs into our inventory levels. Let's look a bit at inventory. The CMHC, the Canada Mortgage and Housing Corporation, which is a government organization, says that we need about 750,000 homes completed per year to keep up with the current demand in immigration. What's expected to be built this year, maybe 260,000. So that puts us in the hole about 500,000 homes each year moving forward. We also have a problem with the lack of tradespeople, plus builders and developers are hesitant to build in the current economy, especially with supply chain issues, as we mentioned before, and inflation causing prices to increase. All of this, we think, is going to cause another boom in Vancouver. And in my opinion, we'll keep causing Vancouver real estate prices to go up. That's the thing with Vancouver real estate, Jessi, as you know, having lived here our whole lives. No matter what we get hit with in any medium short term, prices still go up.
Yeah, it's crazy. It's crazy how it can just, it's resilient. That's a good word for it.
It's resilient. So great for investors, great for those who own homes, who are sitting on property. Continually tough for buyers who are looking to just get into the market, which is again why we stress. There may be, in a very short term, looking at the next 2 months or 3 months, a better time to buy further on. But in general, if you're a first time buyer, you're looking to upgrade in the city, don't wait. This market will always go up in the short term.
Yeah, it's crazy. I mean, so what do you think? Do you think it's going to make a turn as early as fall, or do you think it'll maybe stretch on until springtime before this all really kicks in?
Yeah, I have a feeling we're looking at 2023. And again, none of us have a crystal ball. It's a term we use all the time with our clients. With the Bank of Canada continuing to raise rates to fight inflation, I think we'll still see prices go down a bit. But these inventory levels are going to be getting lower and lower despite the demand. And, there's talk that, of course, like we've said, the Bank of Canada will eventually need to start lowering rates once inflation is under control. And that, the lower rates then, added with the lack of inventory, is just going to make prices go up again. We sometimes
just going to say that.
Yeah, we sometimes don't talk about the fact that aside from all the numbers, all the metrics, all the people moving in or moving out, this city has always been rated one of the best places in the world to live. I mean, just look around, especially on a beautiful day like this. You've got great weather, great parks, the ocean, everything. And that all adds, and the quality of life and low crime, that all adds to, these Vancouver prices that just don't seem to really go down in the long term.
I agree 100%. I mean, you look at, in addition to what you just said, you think about that in a couple of years, we'll probably be deep in a recession, and they will have to lower rates to stimulate the economy, get the engine going. What's going to happen? I mean, if we haven't had a boom already, which I find very doubtful considering everything we've talked about, there's going to be a huge boom from that when the rates come down. In a couple of years, we're going to have a million people new to the country. Where the heck are they going to live, right? So, yeah, man, I don't know. It's just like, get in if you can now. I got people that are trying to, you talk to some people, oh, I'm waiting for the bottom. Okay, well, those who chase the bottom rarely find it, primarily because you don't really know when the bottom is until a few months later, right? So,
yeah, a worst case scenario was I had a client earlier this year, a buyer client who owned a home and was looking to move a little bit closer into the city, but not too far. And prices obviously were high when he was looking. They've come down a little bit, but he got priced out of the market for what he wanted. And he eventually, after looking for about 2 months, decided to move to Alberta. And that's a rare case. We've had great success with our buyers, but it's those cases that stand out. And I think when I hear people think about holding off, I look back at a case like that and just worry, the longer you hold off, how are you going to time the market right? And, you're going to get priced out.
I agree. And even if you can't afford a house, like I'm even looking at a house right now to house myself, my girl and her parents. So an ideal situation, and I'm trying to decide, what to do, but it's not going to be cheap for that. So I'm an example that at bare minimum, I mean, at least pick up some, some rental properties to rent out. you're better just to get in the market than to not. So if you can't afford the perfect super pad, not a big deal. Just buy something and rent it out. That way you're still growing. You're not going to get rich unless you invest in real estate. Pretty much like 90% of so-called millionaires, they started in real estate. That's where you can make huge equity gains. So, and one other quick comment. I like what you said about talking about people, moving out of the area. So as affordability gets more challenging, and prices continue to go, so what do people do? You can't go west unless you're a really good swimmer. You got to go east, right? So, and we don't really have much to the north. But you're right. They'll go to Alberta. I just helped a client actually buy in Nova Scotia. That's pretty extreme, but you can walk in there and buy a house cash for a typical Vancouver down payment, right? So, anyways, if you are watching this and are considering it, give Azim and I a shout, because we have quite a big network of people throughout the country, and even in the States. So if you're looking to relocate, we probably know someone in a city that we can recommend, excuse me, as a realtor to work with. So anyways, okay. So I got something kind of cool I wanted to share with everybody that I found the other day. So it's a little trick on how you can predict what the gas prices are going to be at the pump. So there's this website called gaswizard.ca. So it's specific to Canada, and it's got all the major cities, and it basically tells you what the gas prices will be tomorrow. So when you're filling up, prior to filling up, take a look at this, because, if tomorrow is going to be cheaper, try to drive on fumes for a little bit there for the day and fill up the next day instead. Now, the majority of us need to be very careful with our budgets and spending and whatnot. So saving an extra 10, 20 bucks at the pump sounds pretty awesome to me. This is not a sponsored promotion. It's just something cool that I wanted to share. So yeah, it doesn't predict very far into the future. It's pretty much just showing the next day's prices. So anyways, yeah.
Oh, that's a cool little trick. I'll definitely have to try that out. Well, now let's wrap things up. Despite all the doom and gloom that we've been talking about, that you've been hearing about, the rising interest rates, rapidly changing market, inflation, it's still a great time to buy and sell. Since our last podcast a month ago, we've helped 4 buyers purchase homes, great homes, and 80% of our own listings have sold. So properties are still being bought and sold. Still a great time. Reach out to us if you're thinking of selling your home, or if you want to just get a home evaluation and figure out what your equity is. Similarly, if you're looking to buy and you want a great agent to help you find the right property, hit us up. If you're thinking about joining the industry, joining a great team, you're not sure what brokerage to be with, talk to us. We'll tell you all about our brokerage EXP, the amazing benefits it has, the collaborative movement that we're on, and what Jessi and I could maybe help you with in your career. Thank you so much for listening in, and we'll see you again next time.
Well, that's it for this episode. If you get a chance, don't forget to pick up a copy of my book on Amazon, Rockstar Real Estate Investing, and we are here for you for your questions anytime. Thanks.